Well, shares of Sanofi moving higher this morning after a major sell-off on Friday. The stock crashed almost 20% after the drug maker missed Wall Street's third quarter expectations and also announced a plan to spin off its consumer health division. Here with the latest on that, we want to bring in Yahoo Finance senior health reporter Anjalee Khemlani. Anj.
That's right, Shauna. Obviously, the news of this consumer spinoff really overshadowing the results of Q3. But that consumer spinoff is something that Sanofi kind of dropped on investors. We're seeing a little bit of that movement in the stock today after, of course, that 20% plunge. And it could mean that, investors are still sort of digesting this news. They lost about 21 billion in market value. And the why now question seems to be permeating. CEO Paul Hudson said in the release that they're looking at patent cliffs for some of their products in the mid to early 2030s. And that is why he said, quote, "We are deepening our investment in R&D, taking steps toward becoming a pure play biopharma company and further optimizing our cost structure." This is set to take place at the end of 2024, so it would be lowering the guidance for 2025. And that's the outlook that really impacted the company's stock Friday. It's important to note, though, that this is not necessarily new. We have seen other large pharma companies spin off their consumer segments in the last several years. Novartis, notably with Sandoz, GSK with Pfizer, with Haleon, and then Johnson, of course, the latest one with Kenvue, which we know is basically the largest consumer unit that has been spun off recently, and we saw those results recently. So not shocking. It has been sort of a trend in the industry as these companies look to run tighter, more efficiently, and more innovatively. And so we'll wait to see if it, in fact, does pay off for Sanofi as well as the others.
All right, well, indeed. Shares up by about 3% here on the day. Thanks to our own Anjalee Khemlani for breaking all that down. Appreciate it, Anj.